Hey everybody, Jimmy here. Welcome back to the channel. Today I want to show you one reason why risk to reward ratio is so important. Today I won one and I lost one and I still made money. And I want to show you exactly why. So let's jump in. I've got the Facebook chart up right now. This is the 5-minute chart, and I want to show you what I saw this morning. So this gray dotted line right here, this is the market close. So this is yesterday, and this is today. So you can see what I did was I was watching this opening 5-minute candle, and you could see the high and the low. So once that range was established, I placed an order a penny below that low to go to the short side. We were underneath the previous day's close and we pushed down. I got triggered in and immediately took profit there for 2R. So it was a really quick, really great trade. And as you can see, this trade continued to work its way down most of the morning with a slight shallow pullback and then continuation. So pretty amazing trade on Facebook today. And the other one I took was on Oracle. Hey, so if you're enjoying this video, take a quick second and just hit that subscribe button. It helps support the channel and I really appreciate it. Let's jump back in. And on Oracle, you can see I was looking at this candle here that breached the previous day's close. You can see it settle low right down here at 56.61. So this dotted line here was my entry point at 56.60 to go short. This next candle came in, triggered me in, gave me 6 pennies of the 10 that I'm looking for, pulled back on me, and then I got wicked out. I got spiked to the upside. So it was unfortunate because ultimately the whole thing worked and it rolled downhill and it did hit my target, but it was after a pretty slow, sluggish start and a continuation kind of pullback beyond my stop loss. So overall today, one winner, one loser. Ended up claiming 1R on the day. I'm up 4R on the week. And I want to tell you, so in the intro video, I mentioned to you why it's so important to have a 2-to-1 or 1.5-to-1 or 3-to-1 risk to reward ratio. You have to establish that before you take any trades because you need to be right half the time if you're using 2-to-1 risk to reward. And the reason that works so well is in case like today, I won one and I lost one. So my win rate today was 50%, but I'm still leaving green. I still claimed 1R to add to my stack for the week. Now, if I were going 1-to-1, I would have won one, lost one, and been break even. So no progress made. You know, obviously 3-to-1, I'd be up 2R. So you have to kind of think about that when you're placing your stop losses and your take profits. So on this one, for example, I had a 5-cent really tight stop loss and a 10-cent take profit. So 2R to 1R, risking 1R to make 2. And every time you do that, you're just taking 2 steps forward, and then on the occasion where you lose, you're taking only 1 step back. If you can keep doing that day in and day out at 50% or better, you'll be just fine in terms of making money. So that's the main thing I wanted to cover in terms of risk to reward. And if you really like this video, hit that subscribe button, give me that thumbs up, really helps support the channel, and we'll be back at it tomorrow. We'll see you then.